Bitcoin has done something absolutely crazy in this market right here. We ended up dropping back below the $20,000 level, and if you still hold Bitcoin right now, this is going to be a very, very important one for you, because I feel like Bitcoin's fate for the next months, maybe even years, could be at stake right now. And what I want to break down for you is simply the fact that Bitcoin, after dropping below $20,000, managed to recover and set a double top at the $22,000, roughly 21.7k area. We found resistance very, very prematurely. I mean, I genuinely thought that we'd be able to push much higher into the 20k range, and I still think that that might be on the cards. But we have now slid back below the 20k region. We've lost that $20,000 area of support, and it did trigger a very quick drop, which is what I told you I'd be anticipating. Now, I actually expected that this drop would take us all the way back down to our prior swing low, which would be at about $17,500, but we didn't get that, and instead what we had was this very quick pump right here, an extreme pump, a very, very big one. And this was very clearly just to liquidate short positions. If we take a look at how this pump initiated, we're on the 5-minute time frame right now. So we're on a very, very small time frame. We can zoom in even further onto the 1-minute time frame. It's so obvious. This pump comes out of nowhere, and in one straight leg, within 16 minutes, the price jumps by $1,000. And then again, within 9 minutes, the price jumps by more than $1,000 the next time. All right. So when we see this kind of price action, there's really only a few different explanations for what happened. One of them is somebody suddenly became very, very bullish and decided, I have a lot of money. I have enough money to move the market up by $2,000, 10%, but I don't want a good entry level. So they just market buy. And hopefully you can tell with the element of sarcasm I was using, that's not what actually happens in reality. Nobody who has deep enough pockets to pump the market will actually pump the market. Okay, people don't want to pump the market when they buy coins. They want to secure as low of an entry level as possible. Okay, if you had a choice to buy Bitcoin at 19,000 or 21,000, everybody is going to choose 19,000. So the other possible explanation for this is a bot hunt. This is a stop hunt. This is a hunt looking for stop losses of people in short positions to trigger their stop losses, rack up fees, enter areas of lower liquidity, and basically just screw traders over. Since that point, what we ended up getting, and I don't want to discuss much about that, it's not a nice thing, but it happens in these markets, especially in Bitcoin, because it's not a regulated market. It's just a reality of the market. You got to accept it. It's one of the risks of being here. It doesn't happen often, but it did happen today. What it did do, though, was it took us right up to that $20,000 area on this 1-hour time frame, and we've now found a rejection. You know, what this could have done is actually allowed the market to keep its gains, and then, perhaps we trade a little bit higher, but that didn't happen. The market swiftly brought us right back down, which is not nice. I mean, it's not a nice thing to see. Now, the thing is that if we do end up punching in a higher low, that would be a very, very good sign for the short term in this market. And it looks like bulls are defending this area. I mean, the fact that we got this pump in the first place, I mean, I don't want to give too much credit to it because it's so obvious that this is market manipulation. But at the end of the day, the result that it has printed on this chart right here is that we did get quite a substantial pump, putting in a new higher low with this trend, and that is obviously good. The thing is, if we do zoom out and we look at pumps like this and how they played out in the past, the big one that's coming to my mind right now is this one right here, where Bitcoin went from a low of 3,000. This was 2018, 2019. We rallied from 3,000 up to 14, entered a downtrend, and we had this big lightsaber, these two lightsaber daily candles right here, where we rapidly made some gains, but we lost it pretty quickly, and the market actually went on to set a brand new low with the well, it wasn't a new low because it wasn't as low as the previous low that we punched in 2018, but this low did put us down in the $3,000 range, and this was the March coronavirus crash of 2020. So obviously we're all quite familiar with what happened over there. So I want to make sure that we've got a healthy, realistic perspective on this. I mean, this is not our get out of jail free card right here. This didn't really change anything on the whole. But what I am looking for now is just some signs that we could be able to scramble back above $20,000. I'm seeing a little bit too much bearish sentiment right now. I definitely think that the market hasn't recovered as much as it should have. And that, you know, I would say this when the market is moving up and when the market is moving down. You know, those of you who've been subscribed to this YouTube channel for a while are going to know very, very well that, you know, when the market is moving down too aggressively, I'm always calling for, you know, some sort of continuation pattern, whether that means we trade sideways or we have a reaction rally moving up, which is what I'm saying right now, or, you know, when the market is moving up too quickly, I'd say the same thing in reverse, that we need to pause a little bit or we need to move down just a little bit, because that's how healthy markets move, right? And if we don't get that, things get very extreme. We just get crazy whiplash and rubber banding, and we don't want that. You know, it's not really something you can trade. It's you know, only people that are lucky will make money in ranges like that. Most people will get burnt. You can't even use much skill at times like that. I mean, you are just at the mercy of the waves of the market. So I am liking what I'm seeing right here, just that we haven't triggered a very, very quick sell-off. It looks like this is moving, you know, somewhat slowly, but at the end of the day, the fact that we lost 20k, I can't overstate this, ladies and gents, or I can't understate this even. This is bad. It's not a good sign. If we take a look at, for example, other things like the Ichimoku cloud that you guys know I've been watching quite well, that's another rejection right there on the 4-hour time frame. It's already rejected us 3 times in a row. I've shown you guys why this is so important in a previous video, and if you missed that, just make sure that you are subscribed to the YouTube channel, because you might be missing out on a lot of very, very time sensitive content in this market. Obviously, things are so hot right now, and I'm going to be ripping trades on Bybit. This is pretty much the main place that I'm trading, so if you want to check them out, use the links in the description down below. You're going to be getting over $4,000 completely free of charge by signing up to Bybit using my link in the description down below. So if you like the sound of free money and you want to do fuck all for it, all you got to do is sign up using my link and follow the steps there. You're going to get a lot of free cash by using Bybit. So check it out. This is my favorite exchange. Super stable, super high quality, lots of liquidity. I mean, it's what I use. I swear by it. So if you want to be using the same thing, then that's on screen for you. Yeah, a lot of mounting resistance, just continuing to move lower, really. If we take a look at where the momentum is on the chart, again, I mean, you know, none of these things should be taking us by surprise. You know, there are some bullish factors at play. I mean, but you know, you do have to be on a bit of a reach for it. One of them is that, you know, the dollar index is potentially at you know, a level of resistance. If we zoom out, probably have to look at this on the monthly time frame. You know, this area for the dollar, just up to this kind of green line, which we haven't hit yet, by the way. You know, this kind of area is has been an area of resistance for the dollar. Not a big area of resistance. It's not something that I think would cause too much of a problem, but it could lead to a pullback into this yellow box before the dollar potentially climbs higher. It's a really weird time in the market right now, because there's so much inflation right now, but the dollar seems to be the best place to be anyway, given that. And that means, like, there's no way to win. If you're in speculative assets like Bitcoin, you're losing. If you're in gold, you're losing. Look at gold sliding lower today, right? Gold's actually just fallen out of a pennant that it's been in for quite a while. We did speak about this on the YouTube channel a long time ago, but obviously this pennant, you know, I mean, it starts basically at the beginning of 2021. We've just fallen out of that. I mean, it's not the first time that we've fallen out of it, and it's not really that big of a deal. I mean, it's gold at the end of the day, but you know, point is, we're not seeing anything positive anywhere. You know, stock market down, gold down. It's only commodities like gold. I'm sorry, like oil. If we take a look at oil rallying up, that are doing well. And this actually is just your representation of inflation. You know, 𝗪𝗏𝗧𝗧 put it really well. He is the other YouTuber that I watch all the time. You know, what he said is that while the oil prices are going up, you know, the costs of everything are going up. You know, so if you're trying to buy a strawberry in a supermarket, but, you know, strawberries are not grown in your town, because they're obviously probably not, you know, they're going to have to be trucked into your supermarket. And if that base cost of delivery goes up, well, that cost is going to get passed on to you. And the rising price of your strawberries is inflation. That's what inflation means. Inflation doesn't mean printing money. Inflation means rising, you know, things going up in price, and that's usually because money is being printed. So very, very important economic distinction right there. If you learned something from that, do me a favor and smash up the likes right there. You know, how this applies to Bitcoin, I don't know. It's a very, very confusing time in the market. Let's take a quick peek at the fear and greed to see what this is saying. Yeah, look at that, 11, 11, 11, just constantly just hovering in this extreme fear territory for so long now. Look at this on the yearly scale. We dropped down into this range at the beginning of May, and we've been stuck here ever since, and that is quite a statement. And even before that, we were still, I mean, we had a little bit of relief here and there, but for the most part, we were still chilling in that fearful area. So we've been really, really in the gutters for a long time. If you look at this really, really zoomed out, it's been a long time since we've seen high figures right here. This is, yeah, end of 2021, and that's just neutral. You know, yeah, a little bit of bullish sentiment here, but we haven't seen anything too positive for quite a while now. So that is something which I want you guys to just be keeping in mind as well. You know, I mean, as far as this market, technically speaking, goes, it's obviously looking quite abysmal right now. I mean, dropping below 20k, getting rejected, none of these are good signs. You know, it does all indicate to the bottom, you know, being much lower. It's just that this is the popular opinion right now. It is the popular opinion that the market's going to keep dropping, and I just don't know how I feel about that. I want to take a quick look at ndxalgo.com just to see where the longs and shorts are on the 24-hour time frame. Let's wait for this to load up. Yeah, we got a lot of longs right here. A little bit too many, so that's not good. That generally indicating that, and that's Binance, but Bybit and FTX are still majority long, not by much. Binance is the main one that I'm looking at here. That is 62% long, so not the best sign there. People still, I mean, with their money apparently, thinking that the market could continue to move higher. You know, the play, though, for the most part, is going to be looking at these resistance levels. One of the things that has caught my attention is the altcoin market. You know, the altcoin market just hasn't really gotten smashed as badly as I thought it would have. If we take a look at the last 7 days, for example, we look at coins like Binance coin, it's down by 9%, but that's the same loss that Bitcoin has endured. I think better examples actually would be just looking at their USD charts, because this one I found quite surprising. You see, the last time that Bitcoin was down below $20,000, Binance coin was starting to rip lower below 200, right? If we take a look at this in terms of time frames, let's just map this out. We're talking about the 18th of June up to the 19th. It was basically just 1 day. And if we look at what happened to Binance at the same time, it dropped by quite a bit. I mean, this was a you know, something like a 15% drop. Now we're sitting at similar price levels, but this altcoin is doing a lot better. You can actually probably see this across the board if we start looking at Bitcoin prices. Look at this. Yeah, that's a big shoot up. Right here, Cardano gained a lot of strength against Bitcoin, and it's been keeping it. Binance coin has been flying against Bitcoin as well. Take a look at this. It did hit its resistance area, but it's continuing to climb up right here. So many examples of this. I'm curious to see how Solana is doing. Solana has been losing against Bitcoin, although it is now sitting right at support. And let's take a look at Solana on the USD chart as well. Yeah, it's been in a pullback, looking a lot like, I mean, these gains have been lost basically, is basically how it looks. Although I do want to zoom in and just actually put a Fibonacci retracement on this to see if there's anything interesting. What am I doing to see if there's anything interesting going on here? And yeah, we're just floating around that 618 level now. So the market isn't a bit of a pullback, and you know, if you're feeling bullish on altcoins, I'm not, but you know, if you are, you know, we might actually be at some decent buy levels right now. Let's take a look at Binance coin. Okay, look at that, perfect. It bounced off that 618 level at $205, and we're now about $17 higher. So quite a beautiful little jump there. That's 5% up to our current price and 9% from wick to wick, which is pretty big. You know, a little bit of leverage would make that quite an attractive gain. I'm curious to see if this Fibonacci thing holds up for many other coins. It seems to be holding up pretty well just from the two coins we looked at. Let's check out Phantom. Bam, there you go. That's another Beautiful 618 retracement. This one's quite small. These are not, just because it's bouncing off these support levels, it doesn't mean that this is a good idea to trade. I mean, the bounce just isn't that big. This one, let's measure it. Actually, this was still substantial. This was the same as Binance. This was 9%. I think the other thing to consider is, though, you're not actually keeping these gains. I mean, in a few hours, most of these gains would be gone. If you entered right at this line now, you'd only be up by 2% before leverage. But I mean, realistically, how much leverage are you going to use on Phantom? I mean, you can't really reasonably use anything more than 5 times leverage, and that's fucking a lot. That's a very, very high number for Phantom. So at most you're still looking at like 10% profit. There's just not much room to play around here. Again, by the way, all of these coins that I'm mentioning, including Binance, are available to trade as derivatives. That means with leverage on Bybit. You can trade them spot too. You don't have to apply leverage, but if you want to, it's available, and that makes it a very, very appealing product to people like myself. If you don't understand what that means, then just do me a favor, check out my top comment at the bottom of this video, and I've got a tutorial there showing you how to trade Bitcoin. It does run through the absolute beginner stuff. You probably don't need to hear the stuff right at the beginning, but there is a lot of very, very valuable information there, and it is directly relevant to what I've been talking about right now in this video. So if you want to be able to check that out, then find that link in the comments section. And when you're heading down there, smash up the likes. Just double check that you are subscribed as well, if you do want to make sure that you keep catching this content. For now, I'm not taking any drastic action. Originally my plan was to look at not necessarily shorting the market, but definitely changing my outlook to kill a lot of the bullish bias that I have. But I'm not seeing that quick slide down yet. There is something quite concerning here, where we did paint a classic Adam and Eve pattern right here, where you get one pointy hit at resistance and then a much slower hit at resistance, and the only thing that completes, and this is a bearish pattern by the way, the only thing that completes an Adam and Eve pattern is a bearish backtest, and that then generally indicates that we'd be moving lower. But again, we're not really moving in ways that make sense like that right now. I think if we did sweep this prior swing low right here, that would be where, I mean, we will be fulfilling that Adam and Eve pattern. Just to show you what this looks like, let's bring this up right here. Yeah, so you can have this in the bullish way, but in this case we are looking at the more bearish outlook, so that's kind of what you could expect. I'd like to find a better example though. Let's see if there's... Yeah, right here. This is kind of what we're looking for. And we did just get that retest now, so I'm going to be watching to see if we produce this next leg. This next leg could get very, very destructive. The fact that altcoins have been able to keep their gains against Bitcoin means that there's, if you're a physicist, a lot of gravitational potential energy here. There's a lot of energy, there's a lot of potential for, because they're so high up, there's a lot of potential for a drop. And that is something that I'd be interested in trading. So that's all going to go inside of VIP. Those trades are going to be made on Bybit. Check out the link to Bybit so you get more than $4,000 for free by signing up and following those steps there. And if you want to be able to watch me trading as well, it's the first link in the description, and you'll find all the details there for how to get inside. And by the way, our 50% discount ends tomorrow. This is pretty much your final chance if you want to get in at some of the lowest prices we've ever offered. Check it out. That 50% discount that we're running ends tomorrow. First link in the description, and next to that link you'll see the steps on how to join VIP. Alright guys, I really hope you have enjoyed this one. You know exactly what to do. If you have, smash up those likes, subscribe, tick the bell, do all that good stuff, and I'll see you all in the next one. Bye bye.